The financial world is currently undergoing a profound transformation, and at the forefront of this is Ripple, who are making a strategic shift that will redefine its role in global finance forever. And this pivotal move has seen the recent launch of the Ripple Treasury, an enterprise-grade software designed to revolutionize corporate treasury management. And this follows Ripple's $1 billion acquisition of G-Treasury in October of 2025, meaning they're expanding beyond traditional payments to establish a deeper foothold in corporate liquidity and institutional finance. This new platform offers businesses a unified interface to manage both traditional cash positions and digital assets, streamlining recurring financial flows like payroll and cross-border transfers. For years now, Ripple has been synonymous with blockchain-powered solutions for cross-border payments, offering faster, cheaper alternatives to traditional systems like SWIFT. And XRP, the native digital asset of the XRP ledger, has been central to this, acting as a bridge currency for near instantaneous and low-cost international transfers. Where the XRP ledger is an open-source decentralized blockchain which was launched in 2012 and is renowned for its rapid and inexpensive digital asset transfers, settling transactions in 3 to 5 seconds with minimal fees. And also, its unique consensus protocol is remarkably energy efficient, consuming less energy than even an email server. Okay, so the introduction of the Ripple Treasury marks a significant expansion as it will help to integrate traditional cash management tools with blockchain settlement rails, which will provide finance teams with a single platform to track bank balances, digital wallets, cross-border flows, and it also addresses fragmented global cash management. And this platform also promises automated reporting, FX controls, real-time liquidity visibility, and the ability to hold and move tokenized assets. So, with this strategic shift, XRP's role is evolving and moving beyond its traditional function in cross-border payments, meaning the Ripple Treasury is set to generate new, steady transactional demand for XRP, which will be driven by recurring corporate financial activities. And when direct stablecoin pairs lack sufficient depth, transactions within the Ripple Treasury will bridge through XRP on the XRPL's decentralized exchange. This means payroll cycles and supplier payments will drive consistent XRP usage, shifting reliance away from short-term trade and speculation, whereby the utility of XRP has always been centered on its efficiency for handling transactions, where it can move over 1,500 transactions per second. And with an average transaction fee of a fraction of a cent, XRP offers many key advantages over traditional banking systems, which often involve multi-day delays and higher fees. And if you look at how major financial institutions have already tested and adopted XRP-powered solutions for remittances, with over 300 institutions reportedly joining RippleNet, there's a lot to be excited about. And we're not done yet. So, what do we get with a Ripple Treasury? Well, it provides unified visibility, offering finance teams a comprehensive view of both traditional cash and digital assets, including RLUSD and XRP holdings. And the platform also enables real-time operations with instant cross-border settlements and automated forecasting, which significantly reduces delays. Also, it aims to reduce FX costs and unlock trapped working capital by eliminating pre-funding requirements and streamlining transfers. This system is literally designed for 24/7 yield optimization, ensuring every piece of currency is put to work continuously. It also offers future-ready infrastructure for tokenized assets and programmable payments, aligning with the growing trend of digital asset adoption. Now, in the past, XRP was being held back by the SEC. However, this has all changed since the SEC has now dropped all its claims, giving XRP improved regulatory clarity in the United States, which has been bolstered by institutional credibility. This clarity has led to the launch of some US spot XRP exchange-traded funds in late 2025, further integrating XRP into mainstream finance. So, have you started joining the dots yet? What do you think is going on? Have your say in the comments and join in the conversation. Anyway, let's get back into it. Ripple's expansion into treasury management certainly signifies its ambition to become a full-stack digital asset infrastructure provider. And this vision is supported by strategic acquisitions, such as global prime brokerage firm Hidden Road, which they acquired for $1.25 billion, and stablecoin payments platform Rail for $200 million. And by integrating these capabilities, Ripple aims to strengthen XRP's role in transaction settlement, liquidity management, and other emerging use cases, all the while giving the platform the ability to manage diverse assets through a single, friction-free interface, which is a key differentiator for Ripple Treasury, and potentially insulating Ripple from payment infrastructure commoditization. So, the XRP ledger's robust technical foundation, including its consensus protocol and ability to support various digital assets, makes it well suited for these expanded applications. And its proven reliability of over a decade of error-free performance instills confidence for enterprise adoption, from payments and tokenization to DeFi and CBDCs. In essence, Ripple's strategic shift with Ripple Treasury marks a pivotal moment, broadening its scope within the financial sector. And this transformation redefines and reinforces XRP's utility, transforming it from primarily a speculative asset to a foundational component of daily corporate finance operations, which aims to create sustained transactional demand for XRP, solidifying its position as a key player in the future of global finance. So, here we are. The Ripple Treasury and its associated digital asset, XRP, stand at a critical juncture, presenting both significant opportunities and considerable risks for investors and the broader financial landscape. And the future trajectory of XRP's price is deeply intertwined with its evolving role in institutional finance, regulatory clarity, and Ripple strategic initiatives. But XRP's price has historically been subject to significant volatility, a characteristic common in the cryptocurrency market, with recent performance showing notable decreases. Despite this, longer-term predictions for 2026 suggest potential averages between $2.50 and $3.26, which will be driven by Ripple's expansions and inflows from exchange-traded funds. But I think these figures are somewhat conservative, and regardless of whether these predictions come to pass, XRP is still massively undervalued, so expect the bounce to go higher when it happens. However, risks of deeper corrections persist if bearish patterns continue, and technical analysis indicates a bearish short-term trend for XRP. Because despite significant inflows into XRP-based products, it still hasn't been sufficient to stabilize the price against selling pressure. In saying that, Ripple is actively positioning XRP to transition from a trading-focused asset to a core settlement layer for institutional finance. All the while, the XRP ledger is being developed to handle real-time settlement and tokenized finance operations at scale, supporting features essential for institutions. This strategic shift aims to make XRP a bridge currency within a new financial layer, facilitating regulated lending and cross-border liquidity due to its speed and low fees. And Ripple's expansion into markets like Asia Pacific and the Middle East, along with stablecoin integrations, further solidifies XRP's role as infrastructure for CBDC pilots. In the meantime, the company has been successful in securing regulatory permissions and market entry points, such as the Dubai Financial Services Authority license. And this focus on regulatory compliance and partnerships is crucial, as XRP's value is closely tied to the success of RippleNet and its on-demand liquidity service. where ODL uses XRP to eliminate pre-funding, significantly reducing settlement costs and speeding up cross-border payments compared to traditional systems. But despite these efforts, institutional investors are showing a cautious market outlook, with some reallocating from direct XRP holdings to ETFs to mitigate regulatory risks. And let's face it, investing in XRP comes with a unique set of risks that investors need to carefully consider, with centralization concerns at the forefront. And these concerns are frequently raised as Ripple controls a significant portion of XRP, leading to questions about decentralization. Now, I've got my own thoughts on this, but for now, I'll keep them to myself. But what are your thoughts? I'd love to know. Adding to this, XRP faces intense competition from other cryptocurrencies, CBDCs, and other payment-focused blockchains. And operational risks such as potential security breaches and the dependence on RippleNet's expansion also exist. So, the developments surrounding Ripple and XRP signal a broader trend in the digital asset space, the increasing push for regulated decentralized finance. And Ripple's focus on enterprise solutions and cross-border payments highlights the potential for cryptocurrencies to revolutionize global finance. Moreover, the shifting strategies of institutional investors moving towards regulated ETF exposure indicates a maturation of the crypto market. In saying that, the journey of XRP and Ripple Treasury is a microcosm of the broader evolution occurring within the financial world as it grapples with blockchain technology. And while the promise of faster, cheaper and more inclusive global payments through XRP remains a powerful narrative, the path forward is undeniably complex. For crypto investors and XRP holders, understanding these dynamics is paramount, as the long-term success hinges on Ripple's ability to navigate hurdles and expand partnership. So, the future of XRP isn't just about its price, it's about its ability to fulfill its vision as a fundamental component of a more efficient and interconnected global financial system. And Ripple Treasury speaks that language. And when you combine that with tokenized treasuries, stablecoins, and XRP liquidity rails, you start to see a stack that institutions can actually use and not just experiment with. This is crypto putting on a suit, not to impress Twitter, but to survive an audit. Of course, this isn't risk-free. Treasury systems may lean more heavily on stablecoins than XRP. Adoption could be slow, and XRP's role may remain behind the scenes rather than front and center. But here's my counterpoint to that. Infrastructure rarely looks exciting while it's being built, and it only looks obvious in hindsight. And the launch of Ripple Treasury tells us something important. Ripple isn't chasing the next cycle, they're positioning for the next decade. They're betting that crypto's future isn't just speculation, it's integration and not just price, but plumbing. And if that future plays out, XRP doesn't need to be the loudest asset in the room, it just needs to be the one everything quietly runs through. So, how does Ripple Treasury affect XRP? Well, it doesn't guarantee a moonshot, and it certainly doesn't eliminate risk, but it does strengthen the foundations beneath the story. And in finance, foundations matter far more than fireworks. And finally, I'm curious. Do you see Ripple Treasury as a turning point for XRP, or just another step in the long road? Drop your take in the comments, and if this has helped you think more clearly about where XRP is headed, hit like and subscribe, and I'll see you in the next one.